What's going on, TWP fam? Today we're going to go over everything I know about trading so that way you and I can see the charts together and be on the same page when I start going over my trading reviews. So let's dive into it. If you're new to trading, this might not be the video for you because I'm just going to skim over what the basics are. And then I'm gonna full blown get into more detail on how I look at the chart. But if you're anything like me, you can start here and then venture out to other YouTubers. I'll even post a couple of YouTubers that I watch and who I learned the basics from. Alright, so as of right now the market is closed. I use Eastern Standard Time, so the market for me is open from 6 p.m. Eastern Standard Time to 5 p.m. Eastern Standard Time. So technically the market is still open for about, 19 more minutes. So it's closed for me. Let's just say that. If you're new here, I'm using Top Step. I signed up for a combine on Top Step. It's a prop firm, which is a company that allows you to use their money to make money for yourself. They keep some profits, you take some profits. It's a win-win situation. I signed up for the 50K combine, so I pay $49 a month to pass the evaluation. I've yet to pass the evaluation. I started this last year in March, and I've gone through so many trials and tribulations. It's time to just let it all out on the table. Now, for me, trading is way more than just making quick money, buying the Ferrari, getting the penthouse, and everything like that. Trading for me is full-time freedom, being able to go out as I please, get the things I want, spend time with family, and not have to stress about my financial situations, debts, or burden. So if that's also you, if you can relate to that, stay tuned because I'm trying to make the best of it. I'm not the best when it comes to YouTube videos. I would say I have a short attention span, so I never really know the video that I put the last time up, and then it just becomes chaotic when I upload new ones. But hang in there. It's a growing process. Let's get back to the video. Here's everything I know about the charts. When it comes to trading, there's so many different ways to trade. You can trade based off of patterns. You can use indicators. You can sign up for somebody's signals. You can go based off of the news. You can use a multitude of things to trade the market. Whatever's going to work is what's going to work best for you. So I say that to say that I can only show you what works best for me and what I know about the market, and somewhat try to summarize it in a short video. The very basics that you need to know is candlesticks are the most important part of trading. What is a candle? A candlestick is a way of showing price, how it's moved, and where it's going on the market. So a green candle symbolizes buys, red symbolizes sells. You may hear people say long for buys, shorts for sells. But what you need to know is that a green candle opens at the bottom, pushes price higher, closes at the top, and red is vice versa. Price opens at the top, sellers push it lower, closes at the bottom. All candles look different. All candles tell a story. And the wicks on the candles, I would say, is the most important part of the story. The wick of the candles tell you where price was trying to go but did not succeed in the movement. The actual body of the candle is where the price actually stayed. So think of trading as an agreement between buyers and sellers. The actual body is where they agree to buy or sell that price. The wicks are where they tried to push it. and it did not succeed. It was not in total agreement. All right, so let's get back to the chart. When you look at the chart, I would suggest that everybody that is going to use this video go on tradingview.com. It's completely free. The only thing about TradingView, it is 10 minutes delayed if you do not pay for it. So what I see on my chart versus what you see on your chart will be completely different. I have the up-to-date speed on my chart. TradingView is completely free, so it will have a 10-minute delay. But it'll still show you candlesticks. It'll still allow you to do trend lines, support and resistant lines, all kind of lines and rectangles and whatever shapes that you need to understand what we're about to do. When it comes to trading, the price goes up, the price goes down, and sometimes the price goes sideways. Sideways is usually called consolidation. The most important parts that you need to know is an uptrend, a downtrend, break of structure, support and resistance. Now I'm saying most important, but that's mainly just what I look at when I'm looking at the chart. So what is support and resistance? Support and resistance is kind of like a floor and a ceiling. And usually the analogy that's used is if you're bouncing a ball. You're bouncing the ball on the floor. If you hit it hard enough, it's going to bounce to the ceiling and it's going to bounce back onto the floor. The importance of that in trading is the more times it hits a certain floor or ceiling, that floor or ceiling becomes weaker. So say you have the ball and it bounces up, bounces down, bounces up, bounces down, bounces up, bounces down. Each time the floor and ceiling are getting weaker and weaker. And then eventually, if the pressure is high enough or hard enough, the ceiling will break and the ball will now end up on the next level. That then becomes your new support, and then you'll have a new resistance somewhere above there. Then it just starts bouncing again. Now, vice versa. Say you were bouncing the ball, but then the floor was weak. So bounce, bounce, bounce. It breaks through, and now your support is now your new resistance. The ball bounces up, bounces down. Hopefully that makes sense. I'll go over actual examples on the chart and we'll continue to move forward. All right. The next thing would be an uptrend. An uptrend makes higher highs and higher lows. So now we're no longer moving sideways. We're now going upstairs. So now, bounces up. It bounces down, but not as low as the previous low, so that makes it a higher low. It bounces a little higher, which is now higher than the last high, so it's a higher high, so on and so forth. When it comes to an uptrend, usually you're looking for a breakout to the downside for a short, because remember, the more touches it has, the weaker it becomes. So this is just a diagonal support line. So that was your floor. Your floor became weaker with each higher low that it got tapped on. Okay? Vice versa for a downtrend. This is now your resistance, your ceiling. Bounce, bounce, bounce. You would be looking for a buying potential because now that resistance has become weaker. It broke through the ceiling, it came back, and we're going to the moon. Once again, I will try my hardest to find it on the chart so that way I could give you actual chart examples. And then, last but not least, a break of structure. A break of structure can be found on either side of the fence, whether it's an uptrend or a downtrend. Because a break of structure, if we're looking at the higher highs and higher lows, is essentially just the market moving higher than the previous structure. So this was the break of structure that created this higher high. You know it's a strong higher high if it comes back down to the same area that it just broke out of and rejects it and goes even higher, which would then make this previous higher high now the new breaker structure. I really hope it's making sense. The only way to become a good teacher is by trial and error. So y'all let me know if I'm doing a good job or not. So now that we know the basics of how the chart moves, now it's time to learn about the patterns, or putting these patterns into actual play. So when we look at a chart, there are different time frames to show you the same candles. So when we're looking at a daily time frame, each candle represents one day. So this is the 17th, 16th, 13th, and so far backwards, right? When we break it down to a 4-hour chart, don't let me beat you to the bush, but that means each candle represents 4 hours. I'm in the Eastern Standard Time, so 4 hours. Each candle is going to be at 6 p.m. when the market opens, 10 p.m., 2 a.m., 6 a.m., 10 a.m., 2 p.m. At that point, the last candle will end at 5 p.m. There's usually an hour break. The market reopens at 6 p.m. So if you can see on my right side over here, there's an hour and 7 minutes left until the market reopens for business. The market is open 5 days a week, Sunday night at 6 p.m. to Thursday night at 5 p.m. So you have 5 days to make it do what it do and make an educated guess. I like to think of trading as a game of probability, and so our job as traders is to make the best educated guess on where we believe the market is going to go next based off of the patterns we know and what information we know about the stock, metal, or whatever we're trading at the time. So usually all you're going to see on my channel is micro gold futures. I believe that it has the cleanest price action, and it is a lot easier to understand the chart. You can see the highs and lows, you can see the patterns more clearly, and gold is less likely to move based off of news events. So I would say gold is a little bit more stable. Now lately, since the start of this year, the market has been moving sporadically, but it has been moving sporadically for everybody. So not just gold. When that happens, all we need to know is how to stay calm, remember the patterns we know, and wait for the opportunity to get in. So when it comes to trading, you have to understand what kind of trader you want to be before you even get in the market. Now, I'll be honest with everybody. When I first started this last year, when I first started this prop firm last year, I knew a little bit about trading since 2020. I dabbled in foreign exchange in 2021. I tried options trading in 2022. And then I just took a break until 2024. So essentially, when I first started futures, I was just gambling. Like I was just hoping that I was clicking the right button, buy or sell, and hoping that I would win the most money. So essentially, I walked in the casino hoping that I would get rich quick, get out, and change my whole life around. And I was definitely humbled. And so since then, because I started this in March of last year, I have fully been humbled. And now I have, I wouldn't say so much a strategy, but I am now understanding that trading is more than just a buy and sell button. It's more so about patience. because you don't have to be right about every trade. But if you wait long enough, the right trade will always come to you. When I first started, I was going to the trades. I was just hitting the button. Now I wait for the opportunity to come to me. It sounds boring when you say it like that, but boring makes progress, and progress makes money. And I don't know about y'all, but I'm trying to make some money. So, let's get back to the charts. When you dive more into it and you still learn about the uptrends and downtrends, you'll start to know that there's different patterns on the chart at all times. Some patterns are clearer than others, while others take a little bit more time to form. You would normally use a higher time frame to create your patterns, try to look at the clarity of the chart, and you would go to like a lower time frame to find your entry point. So, as of right now, we're kind of in a tad bit of a Dorito chip, if you will, or a YouTube play button. The market can go any kind of way. Why? Because it hasn't really given us enough structure to tell us where it's going to go next. You never want to be stuck on a certain bias when you're looking at the chart. The name of the game is probability. So all you need to do is figure out where do you think the market is going to go next based off of what the chart is already showing you. So what I can say is, if you zoom in on the 4 hour, I don't know if you guys can catch it, but you can see that the market once, twice, 3 times, you can say that the market might want to go back up to this general area because it looks like it really likes this price area. So probability would tell me that maybe when the market opens, eventually we'll somehow, some way end up back up here, right? Maybe we come up here, maybe we break out and go lower, or we come up here with so much force that because it hit it once, twice, 3 times, and now the 4th, we break straight out of it. We come back to retest, and then we go continue higher. How do you get to that analysis? Well, you can't predict the future. So that's where your theory comes in. I have a journal that when I trade, I write out my theory, I talk it out, and I'm staring at the chart. I'm staring at the chart now more than I'm ever touching the chart. Because all last year since March, I know what it feels like to just touch the chart. You don't make much money touching the chart. So now, if we think of it like a business, we want to think about where it feels smart to buy. Usually you'll hear people say, sell high, buy short, like buy low, sell high. And if we think about it, if the market was here 4 times, 5 if you count this breakdown, we could say that this general area here is lower than this area up here. So you can think that maybe buyers are interested in it at this price. Seems low enough. This is the all-time high. So you can see that based off of gold, because I've just been studying gold for the past year, every time gold makes an all-time high, there's usually a major sell-off. As you can see, made an all-time high, major sell-off. So now we're kind of just in that range where do we continue now to go make our new all-time high, or do we continue to sell off? Like, was this sell-off large enough for buyers to be interested to get it back up to the upside? We don't know until the market opens and actually tells us that. But then you have to ask yourself, how do I get into the trade? Well, so far I've been practicing 3-bar reversals. What is a 3-bar reversal? A 3-bar reversal is usually, if we talk about going long, a 3-bar reversal is going to be a green candle, right? Then it's going to be a red indecision candle. Then it's going to be, this is going to be a red candle. Then the indecision candle is going to be green. And then the next following candle is going to be a larger green. So this is usually my entry pattern. Usually if I start to see this little doji forming after like the market exhausted its possibilities to go lower, I'm usually going to enter somewhere right here. And I will put my stop loss a little bit below that indecision candle, and I try to aim for a 1 to 3 or a 1 to 2 risk to reward. So if we go based off of that, that's for the most part how I get into my trades from now on. Does the market give you that opportunity? Absolutely. If you break it down even further and go to a lower time frame. All right, so if we go to a lower time frame, we'll say the 15. We would be looking on the 15 for our opportunity to get into a trade. So, remembering what I said about breaker structures, we can see that our trend at the moment on a 15 time frame is a downtrend, right? So that would mean our breaker structures would be at the bottom. So this point right here would be a breaker structure point. And it wouldn't have been a strong breaker structure point because we could see right here, it caused some hesitation. Usually a strong breaker structure point is something that comes out of, like it breaks out of it, it bounces back to it, but it stays below it and continues in the direction that it broke down in. So we could say that if we did get into this trade, we would wait to see some sign of steadiness staying below it. We would get in, we would put our stop loss a little bit above where that hesitation was, and we would aim lower. So go for a 3 to 1, and you can see that it would have won right there. That's not always the case, but that's just an example of how I would get into the trade. I hope this makes sense. Trying to find another opportunity of a 3-bar reversal. Not all 3-bar reversals are equal, because you can see that this was a possible 3-bar reversal. But if we were to have gotten in based off of this, well, I guess it would have worked, because it was a green, it was an indecision, and then it was a red. So if we got in at the close of the green and we put our stop loss just above it, well, yeah, it still would have worked out. I would say I don't use every 3-bar, but so far it hasn't felt me just yet. And hopefully I didn't lose you all trying to explain. I'm trying to get better at figuring out how to actually make a playbook on how to explain. I think it would be better if you all told me what you struggled with, because then I think at that point I'd be a lot better at explaining, because then I would know what to talk about. But when it comes to trading, there's so many videos of people trying to tell you this strategy works, it's 100% win rate. And I'm just trying to show you how I trade. So if you're interested in how I trade, hopefully this video helped you, and don't be afraid to ask questions. I'll leave the link to my Discord where I put even further detail of how I look at the charts. Sometimes I even put what I'm looking at on the charts. They're not signals. I just, voice my opinion and my theory. And 9 times out of 10, my theories are correct. But that just takes time of analyzing the chart pretty well. So until the next one, thanks for watching.